Well, good afternoon and welcome to our end-of-day market review, our live session for April 30th, 2012. My name is Randy McMullen. I'm the market analyst for Ideal Trading Lifestyle. And again, want to welcome everyone to this session today. We are recording this session, and to begin with, I'd like to just ask everyone that's currently in the room if they could just give me a hands up if you can hear okay, see the visuals okay. Just want to confirm before we move any forward. Okay, we'll just wait to get some hands here just to confirm that everybody can hear okay and that the visuals are okay as well. Okay, still waiting for some hands to come up on the screen. Just to confirm, please, if you would do that, would be great. Okay. Good. So waiting for a couple more hands to come up. If you can, Greg, if you're there, if you can give us a hand, that would be great. If you can hear okay. All right. Perfect. Okay, sorry this took a little bit longer to get going today. We just needed a confirmation from everybody here. Okay, so again, welcome to our session for today. And we're going to be going through a lot of stuff today as well. We generally take about 15 to 20 minutes, depends if there's any questions or anything like that coming up. That also has a lot to do with it. So, but what we're going to do first is we're going to review the daily news for the day. So we're going to here discuss if there's any impacts to the market that we saw in the news for the day, either the pre-market or the daily news during the day or the end-of-day news. We're going to leverage that into the overall market sentiment, doing a technical analysis of both the S&P and the TSX charts going forward, and move towards the volatility indicator just to discuss that. As you know, the volatility indicator is what we look at to help us understand overall consumer consensus of the market. So it gives us kind of an idea where the overall sentiment is with respect to investors in the market. And then we're going to review the current watch list, see if there's any picks to review. If there is, we'll go and we'll have a look at those on the charting to give you some feedback, and we'll have a look at the previous watch list and if there were any other picks. And then finally, discuss the next trading day and what we need to do to prepare for that. All right, so first thing this morning, we saw that we were looking at somewhat of a flatter open, and as the day wore on, it kind of progressively got a little bit worse through the day. We did not see big declines today, but as you can see here, the S&P posted its first monthly loss since November of 2011. So this was due to a couple of fronts. One, we saw on the U.S. side, we saw that there was less than expected consumer spending, so that tells us that there's not as much money going into the U.S. economy and retail and manufacturing, so that's going to have an impact. And they've confirmed that there's been a slowing economic issue in Spain, which has now identified that they're into a recession because they've now had 2 quarters in a row of contracted economic growth. So Spain is in a recession. So all of that news today kind of slowed things down and hampered any gains in the market, both in the U.S., North America, and globally as well. So we can see the news that's posted here. So let's just have a look at how that kind of relates to the overall market sentiment. And what we're seeing from a market sentiment side was, and we identified this on Friday, was the fact that we're now coming up to and hitting another previous channel resistance line, which is really a cycle high now from approximately the beginning of April. You can see how we punched through the previous cycle high near the middle of April, which was a good sign. But it's going to be a challenge for us to break through this existing channel here, which also represents new 52-week highs. And just based on the fact that we have had quite a steep decline here during the middle of April tells us that, well, to expect that we're going to continue to see that rise might be a little over-optimistic. That being said, we've now shifted into a flat bullish market for the S&P based on the slight decline today. And so we're somewhat cautious with the S&P given the fact that we are finding resistance at a previous cycle high, and that also now we've shifted from a rising to a flatter momentum on the S&P side. Looking at the TSX, we had a slight gain today of 54 points, and as you can see, we pushed through the 50 EMA, which is a positive sign. But again, we're extremely cautious because now we have the 50 and the 22 EMAs out of line, which means the 22 is below the 50. Gives us reason to believe that, in fact, we may see some weakness in the TSX going forward. We're also approaching, as you can see here, an upward trend that's now going to prove some resistance, as it has done since around the end of February. You can see this line here. We're into still very much of a rising bullish momentum on the TSX, but we are cautious right now as well. And we're also seeing, just as you can also look here, the RSI is now punched up to a little over 60. So we've still got a little bit of room there till we hit the 70, but that's also approaching somewhat of an overbought situation. And the TSX is now shows that it's been up roughly 4 days in a row. So a little cautious with the TSX going forward. Looking at the VIX now, as you can see, and we identified this on Friday, was even though the VIX was slightly down on Friday, you'll notice that we had our low actually dropped and looked to find support at this existing channel line now that's been in place since July of 2011. So you can see this line has actually proved to give us a pretty strong support, and based on what we saw today, we've got a white candle day on the VIX, which indicates that we could be looking at some kind of a pull-up on the VIX, especially after seeing, in this case, 5 big decline days in a row on the VIX. And as you know, when the VIX is rising, that's kind of telling us that the markets are declining. And so based on what we saw today with a reduction in U.S. consumer spending, the highlight of now what we call a recession in Spain, gives us reason to believe that investors could be a little bit wary, and we could see a pullback, which is a rise in the VIX. The fact that we're down as low, and today we were as low as 15 on the VIX, gives us an indication that we're going to probably see some support at that level, and so a little bit of pullback in the market is probably where we're looking at. Does it mean we should be investing or should not be investing? Absolutely. We should still be involved in the markets. The VIX is low. It's not an overly emotional market. You can see that the losses are not big losses in the day, so it doesn't mean that stocks aren't going to perform. All it means is that we need to be looking at some tighter sells and perhaps some stop losses on our picks, because we're not going to see the overall sentiment in a rising bullish market as we're seeing right now, when we're seeing markets starting to decline a little bit. All right, our current watch list, as you can see here, show that we didn't have any picks. However, you can see that as of today, we had SAM show up on our watch list. So I'm just going to have a look at that one right now. And this stock, as you can see, is a rising bearish momentum, and you can see how the 22 is beginning to rise up over the 50, so that's a very positive sign as well. The only thing that I'm concerned about this stock, and we've talked about this in subsequent sessions, is we are coming off a cycle low that is definitely lower than the previous cycle. So that's the only concern that we see here. And if we kind of identify our trends here, you can see that we did have a nice pull up through this existing trend line here, which is a very positive sign. But right now I'm extremely cautious with this stock for a couple of reasons. One is it is closed beyond the Bollinger Band, which identifies some weakness, and two, we did have a cycle low lower than the previous cycle, which tells us that even though we had a nice rise today, it could be a rise that is somewhat short-lived. So I would be a little hesitant on this stock going forward. Now, we did have a couple of picks that we identified, so I'm just going to show you CA.RBA, which was a pick from our Ideal Trading Lifestyle today on Friday. I mean, we posted this as our Canadian pick just to give you an example how well we did here. This stock here actually, you can see, was a nice rising bearish momentum, and one of the reasons we liked this stock was because we saw this stock pulling through, and you can see here finding a confirmation of support here and pulling up for the first time, confirming some momentum. If I just connect the cycle highs on Monday, or Friday, sorry, we saw a nice pull through and a confirmation of momentum beginning to build on this stock and giving us potentially room to at least the 22 EMA here. And so this stock here closed on at 2090 on, 2065 on Friday, dropped to a low of 2062 today, and as you can see, popped up quite nicely, closing at 2090. So that was a nice little gain on the Canadian side of the equation as well. Okay, so that about covers our picks that we wanted to review. As you can see, and we just got a little confused. So that's the current watch list. The previous watch list really didn't have any picks on the basic side. So our Ideal Trading Lifestyle clients, we do have different watch lists that we look at for them as well. So let's just talk about preparing for the next market day. Well, market conditions, as we've identified as such, are telling us that right now we are in a cautious state. We saw a pullback today. There's some global and some news in North America that's giving us reason to believe that we could see some investor sentiment looking more to some sell-off sides, so we're somewhat cautious there. There are no stat holidays to be concerned about. There have been some reports that did affect the trading, as you can see with the U.S. Consumer Spending Report coming out. And again, this week we have several other reports, one of which being the jobless claims coming out on Thursday, which, as you know, last week had a definite effect on the markets as they weren't as good as they expected. And also the durable goods orders came out last week, and they weren't as good as expected. So we've seen some economic reports coming out that are kind of not meeting expectations, and as a result had a little bit of pullback in the markets, and those build up in sentiment. The VIX is not an issue at this point, other than the fact that it looks like it has found some support and potentially a little bit of room at where it found support at the 15, possibly up to about the 18 or the 19. So for basic clients, would recommend sitting on the sideline today, mainly because the one pick is not a pick that is showing any tremendous momentum at this point. Even though it had a nice pull through, previous cycle lows indicate that we could be in just a little bit of a short-term gain on that stock for today. Important for any advanced clients looking at picks on the advanced side that if you do get into positions, make sure you check the pre-market news and futures first thing in the morning, just to confirm whether or not we're in a market that's got somewhat of a futures that's trading up sideways, or if it's looking at declining. We can take advantage of getting out of positions or closing any positions that haven't been filled yet prior to. So that about covers what we wanted to review today. As usual, what we'll do is we'll open up the mic if there's anybody that has a question. And it seems that we didn't have any video, and so what we're going to be doing is stopping the recording. Welcome to today's end-of-day market review. My name is Randy McMullen for April 30th, 2012. I want to welcome everyone that's in attendance for today at this session. And so what we're going to be doing today is we're going to be reviewing all of the information that we discuss on our daily live session. So we're going to be reviewing the daily news, looking at the impacts in the market, discussing the market outlook, which in fact would be looking at the S&P and the TSX from a technical standpoint and a charting view. We'll be next getting into the volatility indicator, looking at the VIX and how that's indicating overall consumer investment optimism in the markets. Then we'll look at the current and the previous watch lists, and we'll prepare for tomorrow based on what we've just chosen and selected here. All right, first thing this morning, we saw that futures were looking to somewhat of a flat open, and as a result of that, they did continue to kind of get a little bit worse through the day, mainly on some economic news that came out. We can see here that the U.S. economic report came out with respect to consumer spending and wasn't as good as expected, and they've officially announced that Spain right now is into a recessionary period. What's considered to be recession is when there are 2 quarters in a row in which there is contracting economic growth, and that's what we've seen in Spain. So they've identified Spain as now into a recession. So as a result of this, we saw that kind of weighed on the markets. Investor sentiment kind of took a sideline and a little bit of sell-off began to occur. How that worked in respect to market sentiment, you can see from a charting view on the S&P. We had identified on Friday that we were coming up to a channel resistance here, and you can see this line here on the S&P that is indicating right now we're coming close to our 52-week highs, which is a little bit of a concern, mainly because you can see that we have had some cycle lows dropping lower than the previous cycle, and as a result of that, so there's going to be some strong resistance breaking through, especially 52-week highs based on some of the pullbacks that we have seen. So that being said, pulled away from that channel, and we've now shifted to what we call a flat bullish market sentiment on the S&P. So we are cautious on the S&P going forward based on what we see here, and look for a confirmation of support going forward. Viewing the TSX, we had a slight rise today, and as you can see, this is the fourth day in a row for the TSX rising, and we are rising bullish momentum, but we are cautionary on this one as well, because even though we did pull through what we can see here, which is the 50 EMA, we now have out-of-line EMAs, which is the 50 higher than the 22, and usually a little bit of a pullback occurs there. Not to mention that we've also seen lower lows as far as cycles are concerned, and we're coming up against a trend resistance that's now been in place since the end of February on the TSX going forward. The VIX is kind of highlighting this for us as well. As you can see, finding support here at just above the 15 mark today with the first white candle after 5 consecutive drops. And as a result of that, this could be indicating a little bit of a pull-up or momentum in the VIX moving forward. We're still into a declining bearish momentum on the VIX, but as you can see here, this has been a strong channel of support for us now that we've seen with the VIX going all the way back to May 2011 and perhaps even earlier than that. So we have reason to believe that the VIX could find some solid support there, indicating some further declines in the market, supported by what we see happening now with some of the news, some of the economic reports that are coming out. All right, looking at the most current watch list, you can see that we had one pick today, and that was SAM. And so I'm just going to open up the charting tool now, and we're going to have a look at that. And so looking at SAM right now, I've identified, we're going to just draw some trend lines here. And so with SAM, this is a $103 stock, so it's a little bit pricey for options clients. This is probably your opportunity to look at options buying if you wanted to get into that. We are looking at SAM as pulling through this existing trend line, but again, notice how I've connected the cycles lows up. You can see we're coming up against resistance there. The other concern that we see with this particular stock is that we have had a cycle low drop lower than the previous cycle low, which gives us an early warning sign that perhaps this stock may be heading down even further, and this is just a little bit of a rise. And this is very tricky for a lot of investors, as believe it, it does suck a lot of investors in thinking momentum is building and then all of a sudden pulls back. So a lot of times when we do see cycle lows that drift a little bit lower, it usually ends it indicates that there are going to be some additional lows, and even a little bit of rise is a little premature. So we're quite hesitant on this stock going forward based on what we see with a cycle low, and also what we see going on just with overall market sentiment. Now, I had highlighted another stock here, which was CARBA, which was our Canadian pick that we had selected on Friday. So we selected it on this particular day here, and I'll just get rid of some of these previous trend lines here. And so what we saw happen on Friday actually with this stock was a very nice pull through here and a confirmation of support, which was very important with this particular stock. So you can see this stock closing at 2065 on Friday, dropping down to a low today of 2062 and climbing to 2090, with probably room to around the 22 EMA, which is around 2137. So a nice pick that Canadian clients were able to take advantage of on the Ideal Trading Lifestyle side. Okay, so let's just go back now to our picks on Friday. As you can see, we didn't have any picks on Friday. Markets declined, so as a result of that, we didn't have anything going forward with today. So let's talk about preparing for tomorrow. As we've identified with the overall market conditions, the S&P and the TSX have both found, especially the S&P has found resistance at an existing channel trend that's been in place, and based on lower lows from cycles indicates that we could see some resistance at this level, which in fact we have. That, coupled with some of the news that came out today with respect to the U.S. consumer spending as well as the recessionary outlook of Spain, indicates to us that there could be some investor waning out there with respect to sell-off. So we're somewhat very cautious with both the S&P and the TSX going forward. The VIX giving us a confirmation potentially of support today indicates so we could be seeing some lower lows in the markets as well. No stat holidays to report, and there are reports that are affecting the trading that we identified, which is the U.S. consumer spending, and of course coming out this week we also have the jobless claims come on Thursday again, so that's going to be something to pay attention to. As last week it didn't meet expectations, and we saw the markets pulling back a bit there. The VIX isn't a concern as it's below 30. However, it does confirm a little bit of support today, which gives us an early indication that we could see some lower lows in the markets. It doesn't mean that we shouldn't be trading in the markets right now, because based on where we're at from a sentiment perspective, we don't estimate that we're going to see big declines in the markets, rather some slow declines, and hopefully we see some support gathering. So for those advanced clients that are taking advantage of some of the picks on the advanced watch list, we do suggest that tomorrow you do select and view the pre-market news and the futures, indicating whether or not we're seeing tomorrow as either a flat or a rising day, or if we're into looking at the futures declining, you may want to address that and just cancel any positions prior to market open. This is a time where you may want to be a little bit more cautious and sidelined, because we could be potentially looking at 2 to 3 or 4 day down days based on the rises that we've seen. So that about covers what we wanted to discuss today from a market sentiment and from a live trading report. Now perhaps for those clients that are on the line here, we'll just do a quick question. If you've got any items that you'd like to discuss, you can either raise your hand, type in your question. We'd be more than happy to answer those with respect to the live trading hour today. And for those listening via video link, well, we just ask that you type that video in type your question in, email it to us, and we'd be more than happy to address that in our next live segment. Okay, well, there's no questions that have been arisen, and so my name is Randy McMullen. I want to thank you for attending this live market segment today, and we look forward to future ones with you, and so we just want to ask that all of you have a great market day today.